Hello, you're welcome to my channel. I am God Hand, God and All. Here's a trade recap on how I caught silver trade 4.22 RR. As you can see, the execution rather, on the left corner of my screen. In this video, aside from just the recap, I'll be sharing, that is, simplifying the logic behind each CRT trade I take, and as well, I would show you how I build my narrative, my context. So, without any further ado, let's dive right in. So on this particular day, Thursday, 8th January 2026, as at this time, the candle had not yet formed this way. It was already on the way down to more like a seller candle. Down to this very point, I entered just around that line that you can see there. That's signifying model 1. So how did I arrive at that point that I was going to be selling, not buying? All right. So let's start with the logic. The logic behind it, and as well you could say the confluences I look out for on the things that more like form that perfect source of mine before I then executed this particular position on that day at that particular time. All right, the first, okay, let's drop down to, okay, before that, we build the narrative right from the higher time frame. As you can see here, the daily happens to be my higher time frame reference. That's higher time frame reference point. The week before, this is a weekly time frame now. The week before, and the current week that we are in now, as at this particular time of recording, still building within the range of the previous week. So there was no need going any further out to just to weekly. But on the daily, what we notice here, there has been more like a buy that has happened here since this particular day here on December last year, 31st. A turtle soup. I could go down a turtle soup, and then this here primarily is the target for this particular trade that occurred here on that particular day. So here is the daily range. Don't forget that we are candle traders. At this particular time, Monday 29th December, this range was formed, and then on the 31st of December, the range got souped. That is, liquidity got haunted. You know, the four things that market usually do, or price seeks, right? Attacks high or lows. Now in this case, now the low of this day was attacked, as it was haunted, was swept, was raided, and then we have a chain instead of delivery. I could step down to lower time frame, but that's not what we have come to discuss today. But the point is that this is our overall target here. Now, up to this very point here, we could say there has not been the only thing or set of things that could make this oil price fail to reach this target, because the fact that it's CRT model and or the like doesn't mean that it's always going to be delivering 100% of the time each time. Okay, it has already reached 50%. If I were to put my fib, 50% range had already been reached, so chances are it could reverse any moment without even reaching the target. At the same time, if we're to compare this to that of gold daily time frame, what we notice here is the same range here on gold had not been reached as well, and as at this even this time of recording, there has not been what's it called now, SMT. So chances are this very high here, the all-time high on gold, is still very much doable. That is, price is still very much likely to reach there. All right, so let's go back to how I actually got this trade on this particular day. All right, so the first, I already have in mind that this target up here was doable, that this price, chances are price will still seek it. And then on this day, we had a deep retracement. This day here, Wednesday, 7th of January, there was a soup, this considering this range now. As candle traders, we just look for that particular candle that we want to trade. So on this particular day now, and the next, there was a soup, and then the target was this other down red line here, which is the CRT low. And then as soon as that got completed, in the way up, right, this leg here, you notice this gaps that were formed. So in a way, you could say that there was a buy side inefficiency, sell side imbalance. So, and one of the things that price seeks is inefficiency. Aside from attacking highs and lows, generating liquidity, or creating liquidity, it will seek inefficiency, and they also try to offer fair value. So market will, upon raiding this particular high of this day, January, right? January, it got retraced deeply into this, and thereby seeking this internal range liquidity, and in the form of FVG, or you say BC, buy side inefficiency, sell side imbalance. And then on reaching that particular point, I already had in mind that chances are, since this target was still doable, price could reverse. That's one notion. But how do I prove that? Then I step down to 4 hours time frame. Okay, you will notice something here on the 4 hours time frame, and just stay with me. We'll begin to pick some confluences now. Now this is a leg up before a push, SNC SMC concept. Now before this, when I push this push up, there was a big sell, like a sell before the up move. Now this sell now constitutes the order block, which that is more on another block. You could check that one out. So this constitutes another block, this area, um, just before the last sell, before the buy, constitutes another block, and the high of this candle here that forms this other block here, is actually, because when blocks like this are formed, right, this particular area here, this area between this high and this low, even after price must have actually gone up, chances are price will come back, raiding all internal range liquidity, and tap on coming back into that area of the other block before going more up. So just one known concept in this school of thought, SMC and ICT. Okay. Now, if we're to put a line on the high of that other block, because we know price will surely come down there, that's one. At that particular day, it was reaching that point there. That's one. And also, one other confluence I notice is, can you see the sort of imbalance in price, right? There was more buys than sell in this particular range here. Is my time here, and there was much buy, that is buy inefficiency. There was no sellers, and sell side imbalance. There was more buys than sell here. So this constitutes an inefficiency, or that's a BC, or an FVG. So if we're to put our measuring tool there, that's our fib. You also notice that that place, at that point where the other block high touches, is around the 50% region, 50% area or price point of that gap. So which ICT will call, consequence encroachment, right, or encroachment level. And price will seek to up. That's one of the things that price will do. It will seek imbalance or inefficiencies. So price has gone up, but even before reaching target, which is way up there, price will come back to offer fair value, thereby seeking out this internal range liquidity, tap into this other block here before going back to take this external range liquidity. Or when I say liquidity, that means the highs and lows. Price will only seek to attack highs and lows. Now this is on a higher time frame. I didn't the execution was not done on the 4 hours, so I stepped down to 1 hour. Even for this, there was something else I noticed aside from the first confluence, which is the order block that was formed here, and we have internal liquidity. The second, which is the consequence encroachment of this gap, that's the second confluence. Don't forget, now I have not mention of how I eventually confirmed if this was going to start to buy or sell. I'm still not discussing with you or sharing with you the confluences, the other block, the consequential encroachment of this that is CE of this gap, the halfway point of this particular gap, this inefficiency. And then you will also notice that this particular high, this low here that was formed, this low here, and this low here that this candle reached just at that point here, it forms an SMT. What an SMT is just that two pairs Like in the case of gold now, silver, the SMT pair of silver is good. When price takes a low on the silver, and if it is at that point has not taken the low on gold, chances are on gold the market makers might no longer seek to take that low. Price could start to reverse from there. So you can check more on SMC divergence. I think I explained that in the first video I dropped. All right. So let's compare this to gold. This low that was formed on Monday, the 12th, Monday 5th, around 12 o'clock my time, here on gold, drop it down to 4 hours time frame. Here on gold, this is a low here, right? 5, can you see? That's a low right there. Okay, so this is actually one signal that price might no longer seek to take this low on gold. So for those trading gold, and actually intended to trade both of them on that particular day, but just that gold just acted like a bad boy, left me, just JP. You can see the what's it called, the record on the left corner of my screen. So this was one. So already at that point, with these three confluences already, other block, halfway point of that gap, and the SMT, I already knew chances are there's a high possibility that the price could start to go up from there. Now, with that said and noted already, those three confluences, there is more. Now, when I drop down to the lower time frame, like 1 hour, all I had to do next was just to pick my range. Now, if I'm going to be buying from around here, from where am I going to be buying from, and where am I going to be taking my profit? As I just don't want to, I can see the execution here. As I entered just around this particular point here, just around here, and then you can see where the market is right now. All right, so I had to pick my range, and hence the concept candle range theory. That's CRT. I had to pick the candle that I want to trade. All right, so I decided to pick this 1 hour candle on silver on that particular day. 1 hour candle on silver. That was the intention, just to trade that 1 hour candle on silver, and not actually 1 hour, but at first it was a 1 hour candle on silver because I know that place is actually with the three confluences, chances are to go up. All right, and there's something else I noticed as well, right? That's on 1 hour, and the lower time frame corresponding to 1 hour. But when using this particular CRT model, if you would want me to maybe create video in the future explaining CRT in itself, the entry methods and the likes, you can leave a comment you can leave me a comment, and do well to like and subscribe if you want to see content like this from me in the future. All right, lower time frame corresponding to this, there was another conference just around the point around this time here, 15 o'clock, that's around 9 New York time. There was another SMT that formed here, from here to this particular price point here. An SMT was formed there. I'm going to show this that on gold. So I was watching the two pair correspondingly, concurrently. 1 second. So let's dive down to 5 minutes on gold. Can you see that? 5 minutes on gold. This low here, 1320 to 1520. This low here, 1315 to 15 03. This particular 1503, now that is actually 9 o'clock New York time. All right, that means like an hour since the market open. The market opens by 8 a.m. and then 9:30. I don't know what opens, but I know that's a very crucial time in the US. So around the 9 o'clock in the morning in the US, in the New York. So this particular additional conference also occurred right at that same point where the first three conferences meet. So this is actually what we as counter traders and range traders refer to as the point or the area where time meets price. I'm going to say that again. There are the points where time meets price. Around that time, New York Open, London Open, Frankfurt Open, Asia Open, right? That's where the magic happens. right? You market price would usually or we normally just seek liquidity, like the 14 star price we normally seek, hunt liquidity, then seek to balance inefficiency. So that said, the fourth confluence here, the second SMT, just around that particular area again, the point where price meets time or time meets price. All right, let's zoom in on this now. With those four confluences I already knew, I think I should make it five now because there was the first SMT, the big on the bigger time frame. There's another SMT on this lower time frame. That's the more like the fourth confluence. Now, okay, if I were to recap, you can watch the video, the order block, the consequence recruitment, the halfway point, that 50% zone of that gap, and as well the SMT, the fourth confluence, which I tell you should be even be the number one confluence, is the time, which in this case now is around the key or micro time in the New York, 15 minutes after the open or after each hour, or 15 minutes before the close of each hour in the New York open section. All right, so this is actually a key time. This time here, this key time here, between say 10 minutes immediately after the open in New York. That's by my time here, 14 o'clock. 15 minutes before the close of the first hour candle. 10 minutes or 15 minutes before. So that's basically macro. So this actually around the macro around this time. So I didn't just even get into the market until there was a sweep. Market will do three things. This low that was formed, that's by 1505, right? Market tried to go up, thereby of course you can see this, right? 1 second. Let me draw a path here, right? You can see a low, a lower high, a higher low, a higher low, a lower high, a lower low, taking all this low as liquidity, a lower low, try to come back up here, and then there was a sweep. This is a sweep, taking this low here, then going back up to form a change in a state of delivery. Tap into the other block before then going for the draw on liquidity. So like I said, at first, this first high here, let me go back to 1 hour time frame. Before that first high there was my initial target, as you can see in the video on the left corner of my screen. This high was initial target, but knowing fully whether I gotten a right opportunity, right, to get my pocket filled on this particular day, and I already knew that since this high was doable, right, all I had to do was just to hold and let moving what's it called now, let winning trade run. So the moment the change in state of delivery was delivered around that particular point, I got in, just like you can see the execution right there. I left corner of my screen. I got in right here. Got in right here, right there. My stop loss at the low of that turtle soup there. You can refer to it as turtle soup. Hence, the acronym CRT candle range. I picked an hour range to trade, knowing fully well that you could actually do more than that, or it could have been 2 hours range if I had stepped up to 2 hours. It could have been 2 hours range, and even the 2 hours range. Can you see this range? This particular 2 hours candle by my time here, 12 o'clock. This here, even the second candle closed inside it, which means chances are this very high is doable. So that was the initial target I set, and then I looked up again. I realized that in reaching this target, or this very low, in taking out all this internal liquidity, price had done something, right? It had created an inefficiency in price. One thing that price would normally seek, which already, as at the point that it was reaching here, it was already forming that V-like pattern, right? A low, a low, a lower high, a lower low, a higher high, a higher low, and this more like the usual, what's it called now, head and shoulder pattern. right? This is already for me more like the left shoulder, right? The head and the right shoulder on reaching this particular target. So I knew chances are it could come to the midpoint of, if I thought it's going to reverse, it should come to the midpoint of this. So if I were to calculate that, I think I got out around here. You can see the execution on my left corner, the left corner on my screen. So even after getting to this market at this particular time, choosing my range, you can watch the video again. There's any context I tried explaining, and if I didn't get it too well, you can check the video again if you want to. All right, and if you have any question, you can always leave it in the comment section. All right, so after getting to the market here, as you can see, the execution on the right corner of my screen, right? There was no need for me to just mismanage this particular trade, right? We let the winning trade run. I got out at a particular point here, and that was 4.22. As I said, got in around that particular point where the order block was formed, the model one was formed. That is, there's a change in the state of delivery here. There was a sweep around that particular time, reaching this particular high. Now I took my first profit around this point, like I took partial. Then after doing that, I moved my stop loss to break even around this point here, where if the market comes back against me, I want to then I let the market just do its thing, right? And eventually it hits the target. So there you have it. That's how I got my 4.22 RR on Siva, right? Using the CRT plus Turtle Soup model, right? So if you want content like this from me, you can hit the like button, please, and as well subscription button if you want to have or see something like me in like this in the future. All right, what you can see here is a shot on the execution that I just walked out through on Siva, just a 3 minute long shot. You can sit back and just watch it how the market actually play. You'll notice there how I missed the entry on gold and as well US 30 on that very same day. On that same day, it was crazy. And but there's this thing that market will normally do, even though it seems as if markets had maybe like left or gone far from my point of or area of interest, especially gold. One perfect characteristic of gold is that it would normally generate liquidity afterwards. So if we go back to that, um, you know, this particular price action now on gold, after it had left that entry area of mine, I wanted to, but just left me like that's exactly why I called it bad boy earlier. You would notice like on hourly on hourly there is the following candle to that one that led to the breakout of this one here, as you can see, you know, did a retracement, and at the close of that 1 hour candle after the retracement, there was a soup again for the high. All right, so that's actually one. There was no need for me to chase the market to FOMO to panic because I wanted to enter that spot and then it just didn't tag me in. It didn't come back for my limit order and the likes. All I have to do is just to be patient, wait for it, let the market play out and come to my area of interest. Although if I had just rushed into the market at a particular day, what would have the deal is that I'll be risking more to get less. All right, so you not to just risk a little to get more, which is the goal of this whole thing. Is to do that, I have just have to be more and more patient. Okay, so that's what this is all about. Right, the three core values a CR trader should have, or every trader out there: patience, dedication, consistency, and discipline. Now, with these four core values, I have no doubt that you will excel, though the process might seem, slow at first, but with time, you will get a hang of it, and there will not be any trade that will just go by that you won't be able to participate in. Thank you. See you in the next video.